Welcome to the Real Estate Investing Failures to Fortunes podcast, the show where we fearlessly dive into the untold stories of real estate investors' greatest setbacks and how they turned those failures into resounding successes. I'm your host, Kate Berry, and we're talking with real estate investors across the country to learn exactly how and why they failed, and how they took that failure and turned it into a powerful lesson for their business. So come along with me, Kate Berry, on this transformative journey from failure to fortune. I invite you to join our supportive community where together we can inspire, educate, and motivate each other to achieve all of our real estate investing goals. Welcome to the Real Estate Investing Failures to Fortunes podcast. I'm your host, Kate Berry. On this show, we dive deep into the journeys of real estate investors and agents who have experienced failures but are willing to share the lessons learned that help them turn those failures into fortunes. We are thrilled to be here today with our guest, Aaron Lettsizer. Aaron is the co-founder and COO of OBIE, a venture-backed insurance and risk management technology platform serving 17 million real estate investors in the United States. OBIE's digital quoting platform and instant rate options make it the easiest and most transparent way in the market today for investors to obtain insurance coverage. So, Aaron, thank you so much for joining us today.
Thanks, Kate. Happy to be here.
So we're going to talk about insurance. That sounds so fun.
We are. No, nobody likes insurance. That's why we started this. I still hate getting my auto and home insurance done every year.
Yeah, it's like we were just kind of talking before the episode started about insurance is one of those, it's a big part of real estate investing. It's going to be one of your line items. It's a coverage that you absolutely need. But if you're just starting out into real estate, it could feel pretty overwhelming because the insurance market is pretty tumultuous right now.
Yeah, it's a tough time for the space. And you're right. I mean, one of the reasons we started this after spending years in the real estate space is because we felt like it was one of the largest line item expenses we had. It's now probably one of the largest everybody has these days, but the one that we felt like we had the least amount of control and insight into, and just had really poor experiences getting insurance ourselves.
Right.
And knowing what to look out for and who to work with and what agents to use and the carriers and the things that should be important. So that's why we ended up building OBIE in the first place. It's an insurance company that's specifically focused for residential real estate investors out there in the market.
Amazing. So tell us how you got started in real estate.
So I got the bug for real estate from my brother Ryan. His background was real estate private equity. He started as kind of that hobbyist investor, got the bug himself, started building a fund with some folks in his network, built that to about 2,000 to 3,000 units under management in the Southeast during the 2010s. And that's really what got me the bug, right? After watching the global financial crisis in 2008, looking for an alternative to the public equities market, where else can I put my dollars to good use? And so starting to invest inside of the single family rental market, multifamily, going into mixed use, trying to dip my feet into that world. That's really how I got started. Just those small condo units, right, to start, the first place that we had, and then just trying to grow it from there and learning as we go.
Great. And what market were you investing in?
Primarily the Carolinas and then also the Midwest. So we're located here in Chicago, based here. I grew up in Michigan, so I knew that market. We had some stuff there. And then down in the Charlotte, North Carolina area was another area that really was early but growing. There's a lot of investment going into that space in the early 2010s, 2013, 2014. So it was a really good market to plant our flag early on.
Nice. And did you find success right away? Was it
No, never. Especially if, I didn't have a professional background in real estate. I was going to go to law school after college. And fortunately, I didn't. I think this is a lot more fun. But, you start with those small units and you think, hey, how hard could this be? And something you and I were talking about before, it's always those first units that you really cut your teeth. It's the ones that you lie up awake at night because you don't have that vendor network yet. You don't have that trusted contractor or that trusted maintenance person or the person you need to go to when the HVAC goes out, right? Even small things like that, or figuring out the right accountant that knows and understands the real estate space. What are the tax advantage ways of being able to build that? You just don't know, right? You're like, hey, I got this unit and I'm going to throw it up on Zillow or I'm going to throw it up on Hot Pads, or back then it was Craigslist, right? Everybody was using Craigslist to find rentals. So yeah, but I would say that the biggest kind of learning from that, which I think is applicable both in business really and in real estate investing, we had somebody early on look at the stuff that we were doing. We would always kind of send deals out to folks that were more experienced than us, or I'd send it to Ryan. And somebody early on in my career said, hey, you really need to do one thing and do it well.
Yeah.
Right. You can't, even if you've got a mixed use property that's got first floor retail and a couple residential units, like that's still very different than
Yes.
managing a single condo rental, right? Or a single family home or a townhome or a couple of those, even understanding those dynamics, renting out to tenants, dealing with TI and tenant
Yeah.
improvement inside those areas, long-term leases, right? What are the other implications there? So that's really where we started to find, or at least for me personally, a groove and a comfort level with how I wanted to ultimately grow my own real estate portfolio.
Yes. What I'm hearing you say about learning everything from the start, but and then also having the systems in place to deal with when things come up. And you are really building a business when you have a rental property. And it sounds, what I'm hearing from you is maybe those you learned a lot of those skills to help you build a business because it is about systems and people and having the right things in place to deal with.
Yeah, you're absolutely right. Everybody wants the low maintenance tenant, and that's fantastic. I used to try to be. I mean, we owned real estate assets even when I was still renting here in Chicago. But I always tried to pride myself on being like the tenant I wanted to have. I tried to fix it myself, but like that was never my experience. And it's never the experience, right? It's Murphy's Law. You're going to have a challenging tenant. You're going to have a challenging situation come up on that first one. And you're like, wow, I don't know how to deal with this, right? I'll give you a funny story. Probably our first or second tenant in the first place that we had, there was a bat. It was a single family home. There was a bat that got in and was like in the attic, but then it came downstairs and the family in there, it was flying around them. And you don't know with a bat, like if it came in contact with you.
Yeah.
And so like the pest control people and the city and everything, because bats can carry disease, they require you to go get shots because you don't actually know if you got bit or anything because their teeth are so small. And you're like, what kind of liability like do I have? Like who catches the bat? How do we deal with this? It's like that's never happened again. We've never had a single like pest or weird issue. But of course that happens like right at the beginning. And you're like, what do I do about this? Like this is a nightmare. This guy's like poor 7-year-old has to go get shots, right? In his leg for the next 6 weeks. And you're like, this is awful. I don't want to be a landlord anymore. I have enough going on in my own life.
Yeah, they said it was passive.
Yeah, they said it was passive. They always say it's passive. So that's the thing, right? It's like trying to figure out some organization within that chaos and trying to build systems and relationships where my recommendation for most real estate investors, especially new ones, is like invest in the markets that you know and that you live because you can get there quickly. And you can also start building those relationships in that market, whether it's a banker or a lender or maintenance or cleaning, whoever it might be. Like those are the folks that you can call and have on call and become a trusted individual, right? As you're working through that, whether it's an electrical issue or an HVAC or a roof, right? Like you want to make sure that you have good people in your corner as you're starting to build that because you're going to be able to sleep better at night.
That's right. Absolutely. No, the people that are in your circle working on your team are certainly the most important. I think that's truly when you get to that, maybe that passive lifestyle of real estate is when you have to have the systems in place for it to be a working machine. And when you're first starting out, you don't have a working machine. You got to build it step by step.
Yeah. And what I would say too is much like anything, real estate's a massive asset class, but it's a pretty small community. I have found even like there's a Chicago real estate investors community here in Chicago, which is a fairly small owners. But again, like it's all the same general area. People are willing to help out. Right. And so utilize that network, go to some of those meetups, ask people about who's on your roster of the people that support you in doing this, because it becomes much easier a couple of years down the line when you're like, oh, yep, the HVAC's not kicking out heat. Let me just call up the HVAC guy. He'll go over and he'll take care of it. I go back to sleep, right? 5-10 years ago, I'm sitting there and I'm like, I'm going to go over there. I know nothing about furnaces, but I'm going to be there and I'm going to stand there and I'm going to scratch my head and I'm going to look at YouTube videos. And you're like, no, like that's valuable time for you and the tenant. Invest the time when you have it, when things aren't going wrong, to build that network and that community, those support systems, to be able to ping somebody pretty quickly, to be able to help you out in those situations.
Yes, that's great advice. And now you are one of those teammates, right? You are the person that someone will call when they have insurance questions. So tell me how you got into, how'd you start OBIE? I want to hear about your business and your thoughts on insurance and real estate.
Yeah, so we were naive, right? I mean, we had built some businesses in the past. We figured, this can't be that hard, right? We just go to our broker every year and we get insurance and we don't like the price. And sometimes the claims process is challenging, but like this can't be that hard. Turns out like actually building insurance is a lot harder than we thought, which also makes it fun, right? It's the same reason we got into real estate in the first place. But again, insurance was that really large line item expense. Ryan and I talked to a bunch of people and everybody used the same describing words, right? Everybody said it was a black hole. It was miserable for them. It was always this back and forth. There were these PDFs and spreadsheets. And so we looked at it, we said, hey, with where technology's going, and we had a bit of a technology background, all of these documents we always submit to carriers, there's a person on the other end that's basically just plugging in the inputs that we're giving them into an Excel spreadsheet. And Ryan and I always looked at that and we go, well, we're sitting there doing this for real estate investment assets, right? When we're underwriting deals. Right. And then for that underwriter, it's just popping out a number at the end, and that's my premium. And we said, why can't technology do that? Right? Why can't we make that easier? And then in turn, making that buying process a little easier. And so we started off small, but where we're at now today, at least in the residential side, we could basically underwrite and provide an instantly available rate and a bindable rate that somebody could throw on a credit card right then and there, anywhere in the country, if it's a 1 to 4 unit, single family rental type property. If it's above that, I can't do it instantly. We can still bring that internally here. But we looked at it and we said, hey, how do we effectively digitize that underwriter that's sitting in front of that Excel spreadsheet? Yeah. How can I take the variables that you, Kate, might be inputting? This is the year built, this is the square footage, this is all of those details that everybody's familiar with providing, and then be able to deliver a rate right then and there. Nobody likes insurance. Nobody likes buying insurance. It's that kind of annoying thing that you're doing as you get to the end of the closing process, or maybe you change property managers. And so if we can make that experience just a little bit more enjoyable, or a little bit more tolerable, maybe not enjoyable.
Sure.
And then at the same time, because it's you in the driver's seat actually going through that process, whether you're using an agent or not, we allow insurance agents to write our products. You're actually going through each one of those steps online. And so you then get to make that decision about the type of deductible that you want, or the type of coverage that you want. There's explanations for what those coverages mean. One of the biggest things that Ryan and I always used to hate is that we'd get back a quote from one of the agents we would use, and then we'd look at our pro forma and we'd plug in that insurance number onto our own spreadsheet. And then we'd go back to that agent. We'd say, well, what does this look like with $1,000 deductible? What does it look like with 10,000, 50,000? What does it look like if we added this or that? The way that the very antiquated insurance market works is that every one of those, that agent then has to listen to you and then go back to that underwriter. But that underwriter's got so much business, they're not going to create 20 different variations or scenarios for you. And as a real estate investor, like, it's all about scenario planning, right? And so I want to keep plugging this in. And I want to make a decision about my own comfort level to say, you know what, I'm willing to go with a really high deductible because I want to save on cost. Yes. And so that's where digitizing that process, there's no underwriter that you're pulling time from here at OBIE. You can sit there to your heart's content. We have probably 15, 20% of the people that come through our system, they're not even under contract for a deal. They're just underwriting it to see what the insurance costs would actually be. So that's the type of power and control that we wanted to give back to real estate investors.
Yeah, what an amazing tool. I mean, what you're saying is so great, because every different real estate investor or group is going to have a different goal with that property. Even that property is going to have a different reason for buying, whether it's going to be cash flow or improving equity, or maybe it's a tax shelter. Who knows the reason why, but it should be up to the person buying it to determine what numbers are going to work for what they're trying to do with the property. If you just go through a regular insurance agent, what is the mindset of like a regular insurance agent? If I were to call and say, hey, I got this new property, I need insurance. How are they figuring out your policy?
Yeah, I mean, the biggest process right now, unless they work with OBIE, right, is like they're going to give you maybe a PDF application. They're going to send you a spreadsheet. They're going to ask you all the basics, right? Your bill, square footage, number of units. Yeah. We don't really have to ask a lot of that because a lot of that's publicly available data. And then that agent's going to go out to the carrier, and then they're going to request basically maybe 1 or 2 different types of options. There's so many different options that are available. And it's not the fault necessarily of your agent that they're not providing a lot of options. It's just that utilizing the carrier system as it's built today, you'd go out and be generating 20 different PDFs from these carriers, or requesting 20 different options.
Right, it's a lot of work.
Just to show you all the different variations. Exactly. And so for them as a business owner, it's like, all right, where's the best bang for my buck, right? How can I play a volume game and work with the potential clients that I believe have the highest potential for closing this business, right? And so if you have somebody that comes in and says, hey, just, give me the best quote you can find and I'll bind it, versus somebody that comes in and, like me, that says, hey, well, what if I mess with the coverages here? What if I do this? Let's talk about it.
Right.
Your average kind of single family rental premium is $1,000, $2,000, $3,000.
Yeah.
It's not a lot of commission for those agents, right? And so
Right.
they're also kind of working within the confines of how the market dynamic occurs. But the one thing I will mention that I think is really important is that regardless if people use OBIE or not, you want to find an agent that knows and understands the real estate investment space. There's plenty, and we work with them, but there's plenty of really excellent insurance agents that focus on home and auto, right?
Yeah.
And I think the one of the areas, especially if you've only got a couple of units, you're just getting started, you might just go to that local agent that does your home and your auto. And there's nothing wrong with that. They're going to get you good coverage for an average price. But if you can find somebody that really specializes in this space, right, is writing dozens of these types of policies a month, they're going to have access to carriers that also only want to work with agents that are just working in that space.
Right.
And this is something I started to realize as we built our own company now and we work with agents. Again, from a kind of a business owner's perspective, I don't necessarily want to work with an agent that's only sending me one opportunity a month, right?
Yeah.
Because the onboarding time and that experience, it's all the same. I want to find somebody that's going to send me 100 opportunities a month. And so I'm going to give them really good rates. I'm going to give them more attention. They're going to be really in tune with what a real estate investor is looking for. And so you want to find that person that, and a good indication of that is they might be a real estate investor themselves. You want somebody that knows and understands that dynamic and works in this space because they're going to have access to really competitive pricing for you. And that's the only way to get it is if you are able to effectively do it on a volume.
Yeah, that makes so much sense. I mean, it's a wonderful concept, but I'm sure it didn't happen overnight, right? You didn't just say, all right, I got this idea and boom, now we have a great booming business. Tell us.
Yeah, it was not overnight. It's funny. I had my insurance license for a little while, though never really used it. We got started, certainly not even as a company. We have our own insurance programs now, but we got started by writing everybody else's. We wanted to figure out, is there product market fit? Like any business that's going into a market. So we had a very pretty looking form on a website, but that form was really, and we called ourselves an insurance technology company or property technology and prop tech and insure tech. And we were venture backed, but that was really a pretty form that was just driving into my inbox. And I had 4 monitors on like Travelers' website and Allstate and Liberty Mutual and somebody else. And I'm like furiously typing this information in so I can get the quote back to the client in like a handful of minutes.
Right.
Like that's how we started.
Yeah.
And you know what? Like you had to do it. But what we found out is number one, the market wasn't used to like providing really quick quotes, right? But this was all we were doing. We were eat, sleep, and breathe like the real estate investor space would find folks that would, give us a shot. And we were trying to turn that around really quickly.
Yeah.
We did that because we figured we might not be the best price, but I assume if you're coming to us, you're also talking to other agents. So all I had to do is just try and beat the other agent to then get you on the phone. I wanted to impress you with our speed. So we would give you back a quote. We'd say, hey, Kate, I got something back. I'm not sure how this might look to what your expectations are. Let's get on a quick phone call. Let's talk through it. And if you could do that really quickly, we had a really high rate of success. Nice. But more importantly, it gave us an opportunity to like really connect with real estate investors. We spent, Ryan and I spent hours on the phone with folks just saying, what was important about you? Like, why did you find us? Why did you come here? What's been your experience in the space? What would you care about?
Yeah.
And all of that over time is really what led into what OBIE has become today. And so we had to write a lot of other people's business for a very long, long time until we also then built up enough of our own track record to then go out, much like, folks go out to the lender, the hard money lender, the bank space to get loans on real estate assets. We went out to the reinsurance market and we said, hey, we have this product and we want to build an insurance company around it. We've seen a lot of really good traction. There's really low losses. We think we have an interesting way of getting into this market and finding folks. Will you effectively give us the capital to be able to do that? Will you give us the reinsurance? And so we had somebody that took a chance on us. Ryan sent a cold LinkedIn email to the CEO at Munich Re, which is like the largest reinsurer in the world, like tens of billions, if not hundreds of billions of market cap at this point. And he responded. And we never talked to him, but he passed us along to somebody. Funny enough, she actually works for us today. But somebody took a chance on us, right? Like somebody took a flyer. And I think, again, regardless of the industry that we're in, we kind of talked about that at the beginning, like finding folks that you can bring into their corner. Most people are willing to help. If they've got the bandwidth and you've got like a really clear ask, they're pretty willing to help others avoid the potholes, right, that we hit.
Yes, I love the word alignment. And I love that you did the cold call, email out. And I would so encourage anyone listening that if you're like, oh, I want to do this, I've got this idea, I'd love to talk to so and so, just call them, text them, email them, LinkedIn. You never know, especially if you're saying something to them which aligns with what they're doing. They might have been waiting for someone like you
Oh,
to call,
yeah.
you know?
Yeah, I mean, you never know. I think we have this now, right? I mean, folks reach out if we're hiring for something, whatever else it might be. I might not have the time, but like if somebody reached out, somebody made the effort, and I always really try and pass them along to the right person internally, or even from like an investment perspective. We've now in the Chicagoland area, like we've built the roster of the general handyman and the roof person and the HVAC and like the electrical. I just had to do a lot like re-pull wire at a place, right?
Yeah.
And so if somebody came up to me like, yeah, here's my list, right? Like I've hopefully helped you because I went through a list of HVAC folks before because I didn't ask that one and I probably could have. And so those are the areas where, again, regardless of the business, it's like people are usually pretty willing to help and help you continue to grow and improve on what it
Yes.
is that you're working on.
I love that. I think it's so true as well. And so tell us where you are today, or how's the business? How is insurance? What do you see coming down the pike? And for anyone listening as new investors, what should they be thinking about in terms of the insurance world?
Yeah, I would say the insurance world's gone through a rocky period the last like 18 to 24 months. I think insurance is all about managing and avoiding risk, and the market's been fairly unpredictable. And unpredictability leads in the insurance world to something being risky,
Yes.
right? And so I think a lot of carriers have pulled back. A lot of people have just increased rate. A lot of your listeners as real estate investors, I'm sure, have seen, 10, 15, 20, 25, if you're in the Southeast, potentially even higher rate increases on premium. I think that they're, knock on wood, we have a better than expected kind of weather period this year. I think there's light at the end of the tunnel. That doesn't necessarily mean that there's going to be rate decreases, but at least the stability that somebody can predict upon, that somebody can underwrite on, that much like interest rates, right? Like, can you at least hope to feel like your insurance premiums aren't going to continue to grow more
Right.
than
Can we
3 to
see 6
5%?
months ahead?
Can we underwrite on predictability, right? Or stability? So I think that's the biggest thing. I would say for the biggest piece of advice that I can give you and your listeners, regardless of whether you're a new investor or you've been there for a while, the one big piece that I think is missing in the insurance space is like making sure you have enough coverage for the actual property. One of the pieces that I think in really good times, especially in the 2010s, you were able to get away with 65, 75, $85 a square foot, right? And if you look at your declarations page, it's usually the first page of your insurance document. This is your dwelling coverage, or it's called coverage A sometimes. You want to make sure that you have enough there to actually rebuild the house. And I think it's something where if your rates haven't really increased that much, you've been with the same agent for a really long time, we've seen folks that just continue to renew year over year. They've never adjusted that amount. And the challenge there, and we've tragically seen this happen, is that if you have debt on the property, you have a mortgage, the lender, if there's a total loss, right? God forbid there's a fire, these things happen, unfortunately. But if you don't have enough coverage there to rebuild the entire structure, the lender's just going to say, hey, you know what? I'm not along for the ride here. Just give me my pro rata share of the check. And you as the insured then are stuck with not enough money to rebuild,
Right.
And kind of a burned out structure and a piece of land. Right. And it's tragic. And we've seen folks that even last year, we were increasing an apartment portfolio from $65 a square foot to 125, because there's probably no place in the country at a builder's grade level that you can rebuild a structure for less than $125 a square foot.
Right.
And so those are the pieces where, like, had something happened, they're out, right? That's career ending. And I say this because if you're it doesn't increase your price that much to make sure that you have enough dwelling coverage. If you're going to pay for the insurance, make sure that it's actually doing something for you. You can kind of not cheap out, but you can skim some other areas, right? Like you can be a little bit more flexible and liberal on some of the other areas and say, well, I don't need some of those extra endorsements. I can go with a higher deductible, but make sure that you can rebuild the property of something, like if the worst happens. That is the big piece of advice that I can leave you with.
That is really, really good advice. Because otherwise, what you might as well pay nothing, right? Maybe not nothing, but it's
You might as well. Yeah. I mean, it's absolutely true.
That's really great advice. And Aaron, where are you guys going with the business next? Are you growing? You feel like you're in a good place right now? What's going on with OB?
Yeah, we're continuing to grow. I mean, we gave out about $25 billion worth of coverages last year. We're probably going to get close to doubling that this year. We want to continue to double down on this space. We're barely scratching the surface. Again, as you mentioned at the beginning, there's 17 million individual and small business landlords in the US. They spend on average about $65 billion a year in insurance, just on like the actual premium, not even the coverages.
Wow.
And so there's plenty of market that's there. There's plenty of real estate investors that we can continue to support, and that's what we're going to double down on.
Yes. And I think, and real estate investors really need help in the insurance world right now. I mean, everything is so tight when you are underwriting a property because costs are extremely high. Taxes, insurance, maintenance, the cost to build. If you're doing any renovation, interest rates, it's all cost, right? And so if you got to really be on every single line item, making sure you're doing as well as you can to make sure the deal is being underwritten properly. So you do have success.
Oh, yeah. Totally agree.
Well, Aaron, thank you so much for coming on our show today. And this will be in our show notes, but for our listeners, what's the best way for them to reach out to you, find out more about OBIE? How do they start plugging and playing their real estate deals?
Yeah, best way to do that is you can go to the website. It's obieinsurance.com. That's OBIE insurance.com. Or you can email me. We got some really smart folks, people smarter than me internally here. It's Aaron at obieinsurance.com, and I can point you in the right direction.
Excellent. I'm going to check it out as soon as I'm done recording for the day, because I'm now very curious and interested to see what's going to come up of it. So
awesome.
I really appreciate you coming on the show.
Yeah, thanks so much, Kate.
You're welcome. All right. And to all our listeners, this is the From Failures to Fortunes podcast, and I'm your host, Kate Berry, and we will see you next time.
Thank you for joining us on another episode of Real Estate Investing Failures to Fortunes podcast. If you enjoyed today's stories and insights, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us. Remember, your journey in real estate is a marathon, not a sprint. Embrace the failures, learn from them, and turn them into your stepping stones to success. I'm Kate Berry, and until next time, keep hustling, stay inspired, and keep turning those failures into fortunes. Happy investing.